Right. Hello students, this is your Mr. GST CA Vishnuvardhan. In this video, we are going to quickly revise value of supply chapter in no time. Right, a very small chapter but very important chapter for us for the exam for our exams. So let us go with this chapter. So in this chapter, if you see first value of supply, like it is dealt in section number 15, and section 15 has 5 subsections 1, 2, 3, 4 and 5. So 1, 2, 3 mainly is talking about value of supply, inclusions and exclusions. Subsection 4 and subsection 5, subsection 4 and subsection 5 purely in CA final only. In CA intermediate it is not there. That is the structure of this particular section and chapter in your CA course. Now coming to the value of supply. Sir, GST is a rate and that rate should be imposed on a value. So for that, what should be taken as value of supply? Simple, the law says value of supply nothing but transaction value you should take as value of supply. The transaction value means what? Transaction value means whatever the price is paid by the recipient to the supplier. Sir, will you believe that price whatever they are dealing with? Yes, provided they are not related and they are paying only monetary consideration. That is, price is the sole consideration. So transaction value will be taken as value of supply. That means price actually paid or payable will be taken as value of supply, where supplier and recipient are not related and price is the sole consideration, that is monetary consideration only. Then only transaction value will be taken. Okay, in the law, if at all these conditions are violated, then we should go with valuation rules. Okay, right. In the law itself, they have given some inclusions and exclusions. See, I have given a small notes here. Okay, here if you see, one second, if you want you can take a screenshot of this also, right? One second. For the transaction value you can take some inclusions and exclusions which are given in the law itself, hope you have taken the screenshot, right? Let us go forward without wasting the time. First of all, sir, understand, in the law they have given 5 inclusions, 1 exclusion. Just remember, like Pandavas and Draupadi. Okay, 5 inclusions and 1 exclusion will finish the 15 subsection 1, 2 and 3. Okay, now coming to inclusions, what and all should be added to value of supply? Sir, what and all should be added to value of supply? All taxes and cess whatever you see other than GST and TCS under income tax, not GST. Okay, so all taxes like municipal tax, entertainment tax, customs duty, whatever it is, sir, everything you add it to value of supply other than GST, that is other than CGST, SGST, UTGST, AGST and GST compensation cess, and also TCS under income tax, you don't add it to the value of supply. That is what the concept. Okay, right, that is number 1 addition. Next, number 2, payment made by the recipient which is to be incurred by the supplier. That means, in simple words I'll tell you, obligation of the supplier discharged by the recipient. If the obligation of the supplier is discharged by the recipient, then that should be added to the value of supply. Here, see, for example, see, you are coming to me to purchase some furniture, let us assume furniture in the example. Okay, let us assume furniture, you are coming to buy some red sandalwood furniture with me. Sir, for that I am charging 10 lakhs plus GST. What you are saying, Vishnu sir, out of the 10 lakhs we will pay you only 6 lakhs. You are buying the goods, the red sandalwood, from your friend Mr. Pushpa, unregistered fellow, no? To him we will pay that 4 lakhs directly, and to you we will pay only 6 lakhs. You charge GST only on 6 lakhs, sir. Like that you are asking. I said, okay, fine. But what the law says, that 4 lakhs is obligation of Vishnu and discharged by the students. That should also be added to the value of supply. So it will be total 10 lakhs on which I should charge GST. This is what the concept. Okay, so just go through this example. So I repeat, obligation of the supplier discharged by the recipient, obligation of the supplier discharged by the recipient, then it will be added to the value of supply. That means you don't try to cheat the government by playing these tricks. Okay, so that is what the point. Next, what is the next one? The incidental expenses. The third inclusion is incidental expenses. Whatever incidental expenses supplier is incurring and recovering from the recipient. Okay, that means let us assume packing charges, transportation charges, weighing charges, whatever it is incurred by the supplier, recovered from the recipient, then it will be added to the value of supply. That is what the concept. Okay, fine. Next, interest, late fee, penalty for delay in payment of consideration. This is something interesting here. Now please understand, in GST whenever you go through interest, understand, whenever you go through interest in GST, the interest will come in 2 circumstances. Number 1, you are taking loan from somebody, or you are taking advance or deposit for which you are paying interest. So I say that interest by way of extending loans, advances or deposits, that is exempt under GST. Okay, sir, for you, hint is, for this type of situations there will be 3 parties. You are selling, buying and lender. Sir, You are buying some goods, for that you don't have money. You are going to some third person and asking some loan, and that fellow is giving, for that you are paying interest. So here he is giving you money, and for that he is charging interest. Okay, that is exempt under GST if you remember the exemptions. Second situation is, sir, I am selling some goods to you. You are saying, Vishnu sir, I don't have money. I'll pay after 30 days. I said, no problem, Rob. Pay 1000 rupees interest. Pay 1000 rupees interest. So you are paying me 1000 rupees interest. That will be added to the value of supply. And whatever the treatment for the principal supply, the main thing what I am selling to you, on that whatever tax is applicable, the same will be applicable on this interest also. That means, understand, interest will come in two circumstances. One is for extending loans, advances or deposits, where I am giving you loan or allowing you to use my money and I am charging interest, exempt under GST. The second scenario is where I am only supplying some goods or services to you for which you are making payment to me but paying late interest or late fee or penalty for delay in payment of consideration. So that will be added to value of supply and will be subjected to GST. Okay, so that is what the point. So here that is regarding interest. And one mistake what you do in the problems with respect to interest, sir, interest, should I assume it as inclusive of GST or exclusive of GST? Please understand, question there can be two types. One is they will just say in the question interest paid, late fees paid. I repeat, this interest we are talking for delay in payment of consideration, that only should be added to the value of supply. So in that case, question you have two things. One is they'll give just interest paid 10,000. They will not talk about whether extra GST you have received, etc., etc., nothing. That means what? You have got 10,000 rupees interest. You assume it as inclusive of GST and proceed with the problem. Or they will clearly mention in the question somewhere in a corner, all that amounts mentioned above are excluding taxes. Interest somewhere in the table above they would have given 10,000, 20,000 like that, 15,000 like that, and somewhere bottom of the question they would have mentioned all the amounts given above are excluding taxes. Then you should take it as exclusive. Okay, so I repeat, if the question says just interest paid, then treat it as inclusive. Or if the question clearly mentions these are excluding taxes, all that stuff, then please treat it as exclusive of taxes. Clear? So I repeat, interest paid for delay in payment of consideration only will be added to the value of supply. Interest for giving loan is exempt under GST, that will not have any tax implication. Hope it is clear. That is with respect to interest. Next one, with respect to subsidy. If you are following, we are discussing 5 inclusions. Number 1, all the taxes paid other than GST and TCS under income tax. Next, obligation of supplier discharged by the recipient. Next, incidental expenses incurred by the supplier is recovered from the recipient. Interest or late fee or penalty for delay in payment of consideration. That is what we have discussed now. So hope it is clear for you. Last one, final one, subsidies. Subsidies will be added to the value of supply. Subsidies will be added to the value of supply when it is directly linked to the price. That is first key point. It should be first directly linked to the price. Then you should check who has given that. Sir, if government has given that, ignore it. If anybody else has given, please add it to the value of supply. Clear? Right. So that is what the point, guys. And one more thing here for interest late fee. First of all, let me finish that. For interest and late fee, I have given one small problem also in the notes here, so you can just check this. This is November 2022 somewhere CA inter question actually, but a nice question, delivery agent like that. So you can just go with this question. They have just asked in the question gross GST liability and ITC available. That's all. They did not ask anything extra. Okay, so that is what the point. So hope it is clear for you. Just take a screenshot of it and just try it. Just go through the question enough. But nice question. Right. So coming back to the subsidy, as we were talking, so subsidies other than central government and state government subsidies, if it is directly linked to the price of the goods or service, whatever it is we have supplied, then it should be added to the value of supply. Okay, see now for example, I have given in the example also here for that, and example, yes, you can understand, simple small one, you can just go through. I want to talk about the treatment in problems, actually that is the main thing. So here there is an example, you can just understand, where I am selling notebooks for 50 rupees and I am entering into an MOU with government, where government is saying we will give you 20 rupees subsidy, sell the notebooks for 30 rupees only. I am selling the notebooks for 30 rupees, so I am getting from customer 30 rupees, from government I am getting subsidy 20 rupees. The value of supply is 30 rupees. But same MOU, if I am entering with Infosys Foundation or some other private NGOs, whatever it is, other than central government, state government, then the same MOU I am entering, 30 rupees I am getting from customer, 20 rupees I am getting from the NGOs, all that, then the value of supply will be 50 rupees, not 30 rupees. Hope it is clear. And I repeat, the subsidies like given for buying the plant and machinery or setting up the factory, purchasing the land, all these things will not have any direct link to the price. So those subsidies will not be considered while calculating the value of supply. Hope it is clear for you. Right, so that is the example. Now as I was talking about the tax treatment, the treatment in problems. See, in problems mainly you will find these three type of wordings. Subsidy, sir, whenever you see in problem, they may use the word like price after considering subsidy. Please understand, price after considering subsidy or after including subsidy are different. If that says if it says, please understand, price after considering subsidy, that means what? We know that we will receive the subsidy. We know that we will receive the subsidy and we are fixing this price. Let us assume price after considering subsidy is 10,000 rupees. That means I want this 10,000 rupees and I know that I will get subsidy also of 500. That means it will become 10,500. It doesn't mean that in the 10,500 subsidy is included. No, it is not like that. Only if they say subsidy is included there in the price, then only you should take it as included. Subsidy is like after considering subsidy means I know that I will get subsidy. It doesn't mean that the subsidy amount is included in the price. Please don't misunderstand that. This is one mistake you might be doing. Next, the next one is net of subsidies. When they say net of subsidies, subsidies are removed from that amount. So whatever the amount, the list price or whatever the value have been given there, it is excluding subsidies. It is not including subsidies. So please understand, net of subsidies means subsidies are removed from that value. It is not included in the price. So please remember this carefully. Okay, so this is what the concept all about. So with respect to subsidies, so with this we are done with the inclusions part. Hope you are clear with this inclusions. So 5 inclusions we have discussed. So the next, if you see exclusions, sir, exclusions, only one exclusion, discount. But the point is, when this discount is given, simple, sir, discount may be given at the time of supply or after the supply. If it is given at the time of supply, simple treatment, just show that separately in the invoice, exclude it from the value of supply, enjoy. Am I clear? So I repeat, if the discount is given at the time of supply, exclude it from the value of supply and enjoy. Sir, if the discount is given after the supply, then don't think, sir, who will give discount after the supply? In case of B2B scenarios, there might be a situation where discount is given after the supply. You don't worry about who will give that. Just remember, sir, if the discount is given after the supply is over, then you can exclude the discount from the value of supply provided 3 conditions are satisfied. Number 1, it should be as per the terms of the agreement which we have already entered into. Next, terms of the agreement means need not be in writing, always remember that. Number 2, so number 2, that discount should be linked to a particular invoice. And number 3, sir, proportionate ITC should be reversed by the recipient. Okay, then the discount will be excluded. Suppose if you are not satisfying these conditions, it doesn't mean that law is prohibiting you from giving discount. You give discount to your customer, we are not stopping you, and show that in your books of accounts. We are not worried about that. Only thing, I will not give you benefit under GST if you don't follow these 3 conditions. If you follow all these 3 conditions, enjoy the benefit from GST also. Your GST liability will be reduced, and opposite fellows, of course, ITC will be reduced. That's a different story. But if you are giving discount and you are not following these conditions after the value of supply, after the supply is over, then that discount will remain only in your books. In GST, we don't have an impact. That means imagine 10 lakhs is the value of supply, you give 1 lakh discount, but you have not satisfied these conditions. For the purpose of GST, you should be paying GST on 10 lakhs only. But in your books, you might have shown 9 lakhs, all that nonsense, whatever it is. But for us in GST, you should pay GST on 10 lakhs. Am I clear? So hope it is clear for you. Okay, so there is an example also here with respect to that. So you can just go through this example as I already explained. Sir, for example, I'm making a supply to MSD on 25th June, credit period 90 days, and if you pay within 30 days, I will give you 10% discount, like that I told. He is paying within 30 days, so he is claiming discount. Now, whether this discount can be excluded from value of supply? Yes, it can be excluded from value of supply, because first of all, I told it at the time of supply only. If you make payment within 30 days, I will give you 10% discount as per the terms, and this is linked to invoice. And the only condition is that MSD should reverse proportionate ITC on that discount. 1,12,000 GST will be there. Proportionate ITC he has to reduce. So that way I have given a comprehensive example here. You can just check that. 1 second, ma, 1 second. So this is the example. So you can just go through this, take a screenshot if you want, or the notes is however available, nothing to worry. So this is the example, and with this we are done with exclusion part. The discount part also we have discussed. What if the discount is given at the time of supply or after the supply is over? And there is a clarification with respect to no claim bonus actually. So what is this no claim bonus? Nothing but, sir, when I'm purchasing a car, first year I'm taking insurance. Of course, every year we'll be renewing the insurance. Now, when we are going for the renewal of the insurance, if you have not taken any claim in the last year, if you have not taken any claim in the last year, then to appreciate your driving skills, what the insurance company will do? Insurance company will say, sir, last year you did not claim anything from us, so we are happy, we have saved so much of money because of your great driving. So this year we'll give you something called no claim bonus. And I'm asking, like, please give me that bonus. Then the insurance company says, we will not give it in actual physical form, sir, but in the renewal insurance premium, we will give it in the form of discount. So now the doubt was, what is the tax treatment for this no claim bonus? And as I already told you, sir, this is just like a discount. They are giving it to you in the next premium payment. So it is excluded from the value of supply. So that is what the concept here. There is a small example also for that. You can just go through this, right? So this is with respect to the clarification on no claim bonus. So the next one is regarding, the next clarification is regarding the salvage or wreck value earmarked in claim assessment of damage caused to motor vehicle. See now here, what is this actually now? Please understand. Let us assume there is a car and insurance has been taken on the car by the owner. Now this car has been subjected to accident. You can understand this is accident car, that is why it is like that. Otherwise it would have been even neat. You know, you don't know my artistic skills actually. Right? So this is a car which was subjected to accident. Now imagine while taking insurance on the car, that fellow has declared the value of car as 8 lakhs rupees, on that he has taken insurance. So now this car is now subjected to accident, completely gone, all that stuff. Now there is total loss, and if you sell that now, you will get 1 lakh. That is the salvage value or wreckage value of that car. Now insurance company is paying to the customer what? Based on that, the tax treatment for this salvage value will determine. Now the doubt is whether insurance company has to discharge GST liability when this salvage or wreckage has been sold for 1 lakh. Now the point is, see, if the insurance company is paying only 7 lakhs to the insured person, the person who has taken insurance on this, that means this salvage will become the property of that fellow. That means, Ray, however you sell that, you will get 1 lakh. Balance 7 lakhs I'm giving, keep it with you. So salvage and wreckage is the property of the insured person. So GST liability will not come on the insurance company. GST, like, insurance company doesn't have any right over that salvage or wreckage, that will not sell that. So no GST liability on that 1 lakh for insurance company, in the hands of insurance company. Now if the insurance company pays full 8 lakhs to the customer, that is full amount 8 lakhs. That means they are buying that salvage amount, the entire thing also is with the insurance company only. So insurance company is the owner of this property now, the salvage or wreckage. Now when insurance company is disposing this salvage or wreckage for 1 lakh rupees, GST liability comes into picture. Insurance company has to pay GST on that. That is what the concept. Hope it is clear for you. So if the insurance company pays full amount, the salvage or wreckage will become the property of insurance company. So when it is getting disposed, insurance company will pay GST. No sir, we are deducting the salvage amount and paying only the balance amount to the customer. That means the salvage or wreckage will be the property of the customer only. So if that is disposed of, GST liability will be on him based on other conditions being fulfilled, but not on the insurance company. So that is what the concept, right? So with this, we are done with this particular clarification also, and hence we are done with value of supply amendments. So now we are moving into 15 subsection 4 and subsection 5. See, 15 subsection 4, when 15 subsection 4 is applicable, 15 subsection 4 is applicable when 15 subsection 1 is not applicable. That is, when there is no transaction value, or it is between related person, etc., or if it is like price is not the sole consideration, there may be some extra non-monetary consideration, etc., etc., then you will go with 15 subsection 4, right? And 15 subsection 5 we will proceed when it is with respect to notified supplies by the government. So when the government is notifying these supplies, this should be the value of supply, then we will go with those valuation rules. So for these things we have to go through valuation rules, and before going into valuation rules, let us understand the definition of two important points. The two important definitions we need to understand before going into the discussion of valuation rules are nothing but first one, open market value. The second one is supply of goods or services of both of like kind and quality. So one is open market value, the other is like kind and quality. This is what we have to understand. Sir, open market value means what? With respect to any supply, that can be goods or services, with respect to any supply. Open market value means exactly same supply. That means exactly same goods or services provided to the customer who is not a related person for monetary consideration. Now see, for example, I'm a mobile dealer and I'm gifting a mobile to my wife, iPhone 16 Pro Max. Okay, sir, when I'm gifting iPhone 16 Pro Max to my wife, sir, I am charging 999 rupees only. Okay, to make sure it is not free. Okay, so here, what should be the value of supply? You cannot go with transaction value 999 rupees only. I will charge GST on 999. Please understand, here we have to consider open market value. What is open market value? Same iPhone 16 Pro Max, if I sell to a customer who is not my related person and I am taking purely monetary consideration, no other non-monetary consideration, etc. In such case, I will charge from the customer 1,50,000 rupees. So here open market value will be 1,50,000 rupees. One thing you should remember here, sir, I am mobile dealer. I am not selling iPhone 16 Pro Max in my shop. I am just selling iPhone 16 Pro Max. I am not selling Pro Max variety. I am not selling. Then what should be the open market value? Same iPhone 16 Pro Max in the market during the same time. Somebody might be selling to some customers who are not their related person. Price is the sole consideration that you take. That means supply should be exactly same, but supplier need not be same. That you will take as open market value. Hope I am clear with this here. So I repeat, open market value means, sir, exactly same supply to non-related person, that is to unrelated person. Price should be the sole consideration, and supplier may be the same person or a different person. Supplier may change, but we are getting only the open market value here. So this is open market value. The example, everything, hope I think it is clear for you. Next, supply of goods or services are both of like kind and quality. If at all you are talking about like kind and quality, understand, best example we can take Vivo and Oppo mobiles. What is this Vivo and Oppo mobiles, sir? Example, sir, exactly may not be same, but it is having similar characteristics, quality, quantity, functional components, materials, and reputation. Same or closely or substantially resembles the same supply. Okay, so this is similar supply, not exactly same supply. Hope it is clear. This is similar supply, not exactly same supply. Here also supplier and supplier may be the same person or a different person, it doesn't matter. So this is what the meaning of goods or services of like kind and quality. Okay, so that is what the concept. So hope you are clear with this two definitions, right? So let us go with the valuation rules now. So when we are going through valuation rules, the first rule we have to come across is rule 27. Understand, rule 27 is mainly applicable when, sir, rule 27 is mainly applicable when there is consideration actually. Okay, consideration is there, but it is not fully in terms of money, then only rule 27 will come into picture. That means for schedule 1 transactions, rule 27 is not applicable. Clear? So rule 27 is applicable only when there is consideration present, but it is not fully in money. That means it can be some non-monetary considerations also involved. So schedule 1 transactions, I repeat, rule 27 will not come into picture. So just to summarize rule 27, what it is all about, sir, rule 27 says simple. Rule 27 says, first go with open market value. If open market value is not available, the monetary consideration plus non-monetary consideration given, that's monetary value of non-monetary consideration, that also you take as value of supply. Sir, that is also not possible, sir. Then go with the value of like kind and quality of the goods what you have purchased or services you have procured. That is also not possible. Then go with rule 30 and then rule 31. This concept is same for all rule 27, 28, 29, this discussion. That means you go with rule 30 and 31. First rule 30, rule 31. Okay. But if it is goods, please understand, sir, straight away follow rule 31st and then rule 31. No, sir, if it is services, you have an option. First go with rule 30 and then rule 31. Or straight away go with rule 31 and then go with rule 30. This discussion is same for all the rules 27, 28, 29. Okay. Sir, please give me an example, sir, for this. Understand? Now, for example. Okay. Now, for example, You are buying a mobile by exchanging an old mobile. Let us assume you are buying a mobile by paying 20,000 and old mobile value is 4,000. Now, what is the value of supply? Sir, the value of supply is open market value of the new mobile is 30,000. Then value of the supply will be 30,000 because open market value available. Sir, open market value not available, sir. Then the value of supply will be 24,000. Money plus money value of the non-monetary consideration. I gave 20,000 rupees and I gave a mobile which worth 4,000. So now 20,000 plus 4,000 will be the value of supply. That means 24,000. No, sir, open market value not available. This money value, non-money value also I am not able to identify. Then like, kind and quality. The like, kind and quality with the similar characteristics close to the same reputation, all that stuff. The product available somewhere in the market somewhere will be 27,000. Then that will be the value of supply. Okay. Otherwise, go with rule 30 and rule 31. That is what the concept. Okay. So simple. Rule 27. This is what rule 27 all about. Hope it is clear for you. Yes, now rule 28, very important rule. See, rule 28 is all about value of supply between distinct persons or related person other than through an agent. Other than through agent, very important, because through agent rule 29 will come into picture. So rule 28 is applicable when there is supply of goods or services between related person or distinct persons. Okay, whether or not for consideration, please remember this. Straight away you have to apply rule 28. Right, that is what the concept. Now, if you see the summary of rule 28, I have prepared a flow chart for you, and there are lot of examples also to understand. Rule 28 says that value of supply, if the supply is happening between related persons or distinct persons, value of supply you please take as open market value. Value of supply you please take as open market value. If it is not available, take like, kind and quality straight away. Okay, so simple. For rule 27, if you see, this is the flow chart, and rule 28, this point will not come. Okay, then automatically it becomes rule 28. Okay, so if you see rule 28, value of supply, open market value. If that is not available, like, kind and quality. If that is not available, rule 30 and 31 as we have discussed. If it is goods, first go with rule 30 and then 31. If it is services, it is your choice, rule 30 and 31 or rule 31 and 30 as per your will and wish. That is absolutely fine. But here there are two provisos below rule 28. That is what crucial for us. First proviso says, and understand, first proviso is applicable only for goods and second proviso is applicable for both goods and services. Rule 28 first proviso says, sir, only goods if you are dealing. See, value of supply, as we have seen, open market value, like, kind and quality, all that stuff. But you also have an option to take value of supply if these goods are sent to that related person or distinct person for further supply from such place. Okay, in such cases, what you can do, sir, value of supply instead of open market value, all that, like, kind and quality, you can take from that other related person or other branch they are selling it. No. So, what is that value of like, kind and quality of goods they sell from their place? Okay, on that 90% you take as value of supply. So whatever the goods you are sending to your related person or distinct persons, if it is intended for further supply by that related person or distinct person, then value of supply at your option, you can take open market value if you want, no problem. Otherwise also you can take 90% of the sale price to unrelated buyer by that related person or distinct person, okay, of like, kind and quality, that will be taken as value of supply. So either open market value you take, no problem, or 90% of the sale price from your related person, that branch, that you take as your will and wish. Okay. Second proviso says both goods and services. I will show you the examples also. Second proviso says both goods and services. Sir, if related person or distinct person transaction, we said open market value will be the value of supply or like, kind and quality, all that. But the interesting point is, very important point, if at all the recipient is eligible for 100% ITC. If the recipient is eligible for 100% ITC. Yes, I just did not write here. If recipient is eligible for 100% ITC. Okay, then whatever the value declared in the invoice is deemed to be open market value, and hence you can take that itself as value of supply. So I repeat, if at all recipient is eligible for 100% ITC, whatever the value of supply declared in the invoice, that will be treated as value, open market value, that you can take as happily value of supply. That is what interesting proviso here. Hope it is clear for you. So let me show you an example also. Now see, for example, see, there is a company called Vivarth Private Limited registered in Tamil Nadu. Now this Vivar Private Limited is sending the stock without consideration to its Tirupati branch, which is there in Andhra Pradesh. Now when they are sending this raw material, let us assume 40,000 kgs raw material, let us assume from Chennai branch to Tirupati. That means Tamil Nadu to Andhra Pradesh, they are sending the goods. In that case, the open market value of that goods is, let us assume 5 lakhs. Then value of supply will be taken as 5 lakhs. Sir, open market value not available, sir, but like, kind and quality we have, sir, 5,20,000. Then value of supply will be 5,20,000. Sir, that is also not available, sir. Then what should I do? See, if this is available or not available, please understand. If from Tirupati branch we are selling these goods of like, kind and quality for 6 lakhs, then we can also take, see whether open market value is available, like, kind and quality available, all that stuff, keep it aside. Sir, if at all from Tirupati branch I am selling it, the company is selling it for unrelated buyer, the like, kind and quality goods 6 lakhs. The entire information for you in the question, it will be available, nothing to worry, like how I will identify all these things. In reality, in practice, you should go and identify all that, but in exam they will give you all the details in question. You need to understand the question and pick the information, that's all. So if at all from Tirupati branch they are selling this raw material, like, kind and quality raw material, whatever the price they are selling to the unrelated person, on that you take 90% as value of supply. This is also available for you. If you want, you choose that. Okay, if open market value is not available, you come to like, kind and quality. Sir, open market value is available, you take market value, open market value. Even if open market value or like, kind and quality, whatever is there as the situation, if at all from that branch you are making a further supply, you can see the sale price on that 90% also you can happily take by avoiding these two people. By avoiding these two people, actually you can take this as value of supply. Hope it is clear for you. Okay, and as per the second proviso, there is one more interesting point. As you know, if Tirupati branch is eligible for 100% ITC, then they have given in the invoice, imagine they have given in the invoice 100 rupees as value. That 100 rupees itself will take as open market value, and that itself will be treated as value of supply. On that only they should pay GST. Am I clear? So if Tirupati branch is eligible for 100% ITC, whatever the value is declared in invoice, that shall be treated as open market value. That itself will be treated as open market value. Imagine in the invoice they have given 100 rupees, that itself will be taken as open market value. Hope it is clear for you, right? So that is what with respect to that example. Fine. So you can just take the screenshot of the example also if you want. I'll just make it full screen. Wait 1 second. See this 91 example, you can just take a screenshot also. Next there is 92 example also, 92 and 93 similar stories. You can take screenshot. One is between related person, the other is between distinct persons. Same concept, just the same concept. I have just given the examples. You can go through them. You can pause the video and go through the examples, or you can take the screenshots also, or we have the material in the Telegram channel in the description. Please check. Okay, this is one part of rule 28. Now the next one. So the next one is rule 28 sub rule 2 is got amended actually. So you will be seeing rule 28 and sub rule 2. I am attaching the amendment video here, so don't worry about the change in costume. Right guys, the next clarification is regarding the guarantee given by the directors or the corporate guarantee, where see I have given here the notes for you to read all that for your better understanding. Yes, I have given notes here separately and an example also. You can just go with that. So here first of all, one situation is where company is taking the loan, director is giving the guarantee for that. Next situation, company is taking the loan, another related person, another company is giving the guarantee. So we are calling it as corporate guarantee. In such cases, because they are related persons, whatever is happening between them is supply, and there should be GST on that. For charging the GST, there should be value of supply. Value of supply, you know, when there is related person situation coming into picture, rule 28 will come into picture. So rule 28 is being amended here, and there is a clarification, all that stuff also. So let us see that. Sir, nothing but when director is giving guarantee to the company, I mean guarantee to the banks for the loans taken by the company, in such cases, sir, what is the value of supply? The value of supply is, see, as per rule 28, the open market value should be the value of supply, because transaction between related person. Now the RBI guidelines says any director giving corporate guarantee, the guarantee to the loans taken by the company, he should not receive any consideration. That is what RBI guidelines says. That means for this transaction there is no open market value going to be available. Then Here, what is the value of supply? Nothing. So nil and no GST. But RBI guidelines also says that in exceptional circumstances, you can pay remuneration to the director for giving this guarantee. If that is the case, whatever the remuneration has been given, that itself will be taken as value of supply, right? So that is first part of this particular discussion. Now coming to the next part. The next part is, sir, if a company is giving guarantee to another company which is nothing but a related person, right? In such cases, sir, here please understand, guarantee is to be given to a company which is located in India. Okay, the company should be located in India, then only this one. If the company is located outside India and you are giving guarantee, then this will not come into picture. Okay, so now, sir, what is the value of supply? What is the value of supply? The value of supply is 1% of the guarantee given or actual consideration. So 1% of the guarantee given per annum and of the amount of such guarantee given per annum or actual consideration, whichever is higher will be taken. Now here another interesting thing is, if the recipient who is taking the guarantee is eligible for 100% ITC, whatever the consideration they are charging, that itself will be taken as value of supply. I will simplify it even further with an example. So here there is an example given. If you see, sir, there is HDFC Bank which is giving loan of 100 crores to Vaikunth Limited, which is a subsidiary of Mahavishnu Limited. For this 100 crores, somebody should give guarantee to HDFC Bank. Imagine if HDFC Bank is getting guarantee from the director of the company called Vishnuvardhan, Mr. Vishnuvardhan. Then the law says, for these type of things, actually as per RBI guidelines, Mr. Vishnuvardhan is doing it without consideration, and value of supply is nothing but open market value, and we have understood already there is no open market value for this. So because there is no open market value, value of supply will be nil. So that is first thing. Suppose if Mr. Vishnuvardhan is charging a consideration of 20 lakh rupees for giving this guarantee, then that 20 lakhs will be taken as value of supply. On that there will be GST. Hope it is clear for you, right? Next, sir, suppose if the guarantee is given by, this is what the second part of discussion actually. If the guarantee is given by Mahavishnu Limited, the holding company of Vaikunth Limited, and here the guarantee is given for 5 years, and each year the renewal will happen. And Vaikunth Limited pays 25 lakhs to Mahavishnu Limited as a consideration for this every year. Now, please understand, what is the value of supply? The value of supply will be 1% of 100 crore, the guarantee for which you have given, or 25 lakhs, whichever is higher. So obviously 1 crore will be higher, and Mahavishnu Limited has to pay GST on 1 crore because being the supplier. If Vaikunth Limited, the recipient, can take ITC fully 100%, then sir, whatever is charged in the invoice, whatever is the amount charged in the invoice, that is nothing but the actual consideration, that itself will be taken as value of supply. We will not compare it with 1% of the amount on which guarantee is given. Clear? So that is what the second scenario. Hope it is clear for you, right? So I request you to just download the material here, like the amendment material is available in the description. You can just go through the Telegram channel, you will download it. If you have the time, please write that also, so that once it will be better stored in your memory. So otherwise you can just take a screenshot of this also, it is covering everything. My suggestion is, better if you write it once, you will have even better clarity, or you can remember it for a longer period. That is what this clarification. And one more thing, some small part of discussion is also left here in this. Sir, there are various other possibilities also with respect to this clarification. Here, sir, what they are telling now, see, loan, you give guarantee, no sir, you give corporate guarantee. Here the problem is, loan is partly availed. Out of 100 crore, they have just availed 30 crores, or they did not even utilize that. Imagine it is a bank overdraft or whatever it is, sir, they have not yet availed it fully. Whether the GST will be charged on only loan amount availed, etc. Here, please understand, value shall be 1% on the amount guaranteed, but not on the loan disbursed. Please understand that. So how much loan disbursement happened, that doesn't matter. Here you have given guarantee for how much amount, on that 1% we will take as value of supply, right? So that is first one, right? We are done with this. Next, second one. Sir, what is the second one? Takeover of existing loans. That means, normally HDFC Bank is having loan and we are shifting it to ICICI Bank. So this takeover of existing loan is there, no? Again we should pay GST on that. Within 1 year itself, like already I have paid GST when the loan was taken in HDFC Bank, 100 crores, director gave guarantee or another company gave guarantee. Now, sir, it is being shifted to ICICI Bank after 6 months or 7 months. Should again I pay GST on this? So not required. Please understand, merely an assignment of already issued corporate guarantee, the GST shall be applicable only if there is any fresh guarantee. Only if there is any fresh guarantee, otherwise GST will not be applicable. Am I clear? So that is what the concept. Next, so simple, takeover of existing loans, no GST again. Only one, simple. Once you pay for the corporate guarantee, what you give, you pay once. Again, if there is any fresh loan for that, again you are giving any guarantee, again you pay. Just shifting of loan from one bank to another bank and all, again and again, don't pay GST. Okay, that is second one. Now the third one. The intra-group corporate guarantee. Obviously, we are group companies. One company is giving corporate guarantee to another company. Sir, if it is given by the domestic company, GST will be paid under forward charge. If the guarantee is given by the foreign company, then GST will come under reverse charge. Simple. Sir, what if the company is located outside India to whom we are giving guarantee? As I already told you, if it is export of service, if the guarantee is given to a company located outside India, the above provisions are right away not applicable. This is only when the recipient, that company to whom you are giving guarantee is located in India, then only these provisions are applicable. Otherwise, these provisions are not applicable. Now, sir, what if guarantee is given for multiple years or less than 1 year? Then obviously, what, for each year you will charge 1%. In case of less than 1 year, sir, you will go proportionate calculation. You know, for example, loan amount is 100 crores, guarantee given. We have given guarantee for loan of 100 crores and it is for 4 months. And we got a consideration for giving guarantee 2 lakhs. This another company got a consideration of 2 lakhs. What is the value of supply? 1% of 100 crores, sorry, 100 lakhs into, this is not for 1 year, this is for 4 months. So 4 divided by 12. Compare, you will get 4 lakhs. Or compare it with 2 lakhs, whichever is higher. 4 lakhs is higher, value of supply will be 4 lakhs. That way, proportionately, you should do the calculation. Hope it is clear for you. Right, next. So, sir, suppose what if the corporate guarantee is given by multiple related entities? GST shall be paid by each such co-guarantor on proportionate basis. For example, this is Vivad Limited. Sir, 100 crore I am taking loan, and for that guarantee A Limited is giving, B Limited is giving. A Limited is giving for 60 crores, B Limited is giving for 40 crores. In such case, for 60 crores, A Limited will pay GST. For 40 crores, B Limited will pay GST on proportionate basis. Simple. Okay. So that is what all about this clarification and the amendment in rule 28, sub rule 2. So let us move on to the next clarification. So the next one, if you see, the clarification regarding the services provided by head office to branch officers. See, where head office is providing some services to branch officers for which full ITC is available to the concerned branch officers. There are internally generated services and for that there are invoices issued. Here the problem is, see, the head office is raising the invoice for the services provided to branch office. In that branch office, whether in that invoice to the branch office, whether the cost of all components including the salary cost of the head office employees who are involved in providing the service, this also should be included in the invoice. That is the doubt. Is it to be included? Then the department has clarified, sir, if the ITC is available, please understand, if 100% ITC is available, whatever is declared as an value in the invoice, that itself will be taken as open market value. So you need not worry about adding the cost of the head office employees into this, all the stuff. So not required. And if invoice itself is not raised, then the open market value itself will be treated as what? Nil. That means, understand, sir, head office is providing services to branch office, and in such cases, value of supply, if 100% ITC is eligible for the recipient, the branch office, then invoice is raised na, that itself will be taken as open market value. Not raised na, open market value will be taken as nil. On that, GST will be paid. Clear? So whether the cost of employees is included or not of the head office, it doesn't matter. Not only here, one interesting part is that even if the branch office is not eligible for 100% ITC, in that cases also, it is not mandatory to add the value or cost of the employees of head office in the taxable value of supply. So whether simple ITC eligible or not eligible, cost of employees, all this stuff of head office need not be added, not an issue. Okay, so that is what the another part of this clarification. Okay, 100% ITC available, 100% ITC not available. Clear? So with this we are done with that clarification. Let us move to the next one. So the next rule 30, sir, when rule 30 is applicable, when rule 27, 28, 29 are not able to help you, then rule 30 is applicable. Rule 30 says, see what is your cost of production or cost of acquisition or cost of provision of such services or goods, whatever it is. See, in that case, 110% of that cost will be taken as value of supply. That is rule 30. Now, rule 31 says, sir, if rule 30 is also not able to help you, that means 27, 28, 29, 30 are not able to help you, then rule 31 says, follow the provisions or the spirit of the law as per section 15, and in consistent with those provisions, you determine the value. That is what rule 31 saying. And one more interesting thing, as you already know, if at all you are dealing with services, before following rule 30, you can straight away come to rule 31. Okay, that is what rule 31 and 30 all about. Small points. So we are done with 15 subsection 4 and related rules, all that. Now 15 subsection 5, you know, on notified supplies, the valuation will be done as per the rules here. So rule 31A, 31B, 31C and 32 will be going through. So what is rule 31A first of all? Rule 31A is applicable for when it is in case of lottery, betting, gambling, horse racing, all that stuff. And please understand, rule 31B is given for online gaming, including online money gaming. Rule 31B is available, and for casinos, rule 31C is available. So that we'll be discussing. Rule 31A, now lottery, betting, gambling and horse racing. For that, what is the value of supply? The value of supply is nothing but simple, sir. If at all it is a lottery, sir, whatever the value is nothing but 100 by 128 of the face value or the price notified in official gazette, whichever is higher. So it is nothing but, see what you will do in case of lottery or this betting, gambling, all that, horse racing and all. See, if at all you are buying a lottery ticket worth 250 rupees. If it is the 250 rupees worth, then face value or whatever, what we will do, sir, we will take 250 into 100 divided by 128. That will be the value of supply. That means 195.313. Or we will check, sir, whatever is the notified value, in the official gazette, 240 rupees. 240 into 100 divided by 128. That we will check, whichever is higher. Okay, obviously 250, 240, whichever is higher, 250 on that into 100 divided by 128 will give you the value. Hope it is clear for you. Okay, so this is next part, simple one, rule 31A. Sir, if it is lottery, that is for lottery, yes. And if it is for actionable claims such as betting, gambling and horse racing, 100% of the face value of the bet, how much you are putting, or 100 or amount whatever paid into the totalizer, that is with respect to horse racing. So if it is betting and gambling, 100% of the face value of the bet. For example, you are betting 1 lakh rupees, 1 lakh will be the value of supply after deducting the charges and any statutory taxes, all the stuff. So how much ever bet you are placing, that much will be the value of supply. If it is horse racing, you know the totalizer device, all the stuff. So how much ever the amount is paid into the totalizer, that will be the value of supply. Okay, so that is rule 31A. 31B and 31C, I am attaching the video of amendment, so that again there will be change in costume, don't misunderstand. So the next one, if you see, rule 31B and 31C, the new rules. See, this is with respect to online money gaming, online gaming. With respect to this, what will be the value of supply? So you know, online rummy or online PUBG, etc. For online gaming and online money gaming, all these things, sir, what is the value of supply? And not only that, sir, the same logic, same provisions are applicable even for casinos also. Okay, in casinos you might be going and playing various games. For that you might be purchasing some tokens, chips, coins or tickets, all that stuff, right? So for that, what is the value of supply? So I repeat, rule 31B, 31C, different situations, but conceptually both are same. So what is the value of supply here when you are going through online money gaming or online gaming, all the stuff? Sir, imagine for playing that game, you have deposited 10,000. That 10,000 will be value of supply. Sir, I have used only 8,000. And 2,000 they have refunded to me. Now, what will be the value of supply? The value of supply still will be 10,000. That means once you have deposited the amount, whatever you have deposited, that amount will become the value of supply, because they have refunded it or returned it to you, whatever reasons, sir, that will not be considered. So any amount returned or refunded by supplier to the player for any reasons whatsoever, including player not using the amount paid or deposited. If you say like, sir, I have not used that money, so that I am taking it back, still we will not ignore that. We will take GST on full amount, and that is not only on the normal currency money whatever you have paid, but also money's worth including virtual digital asset. So I can say, like, if you put up even cryptocurrency also, then it will be taken as consideration and it will be subjected to GST. So even in casinos also, if you are going to play any this games where you are buying the tokens, chips, coins, tickets, all that stuff, how much ever you have deposited, that much will be taken as value of supply. I repeat, if anything is returned because you have not played the game, all the stuff, then also we will not leave you, we will charge full GST on full value. Okay, now another interesting point for both this rule 31 and 31b and 31c is this one. Sir, this is applicable for both 31b and 31c. If you have won, let us assume your investment, I mean you have put up 10 lakhs, won 20 lakhs, you you continue playing, the 20 lakhs, 20 lakhs became 100 lakhs, 100 lakhs became 200 lakhs, you continue paying, there won't be any GST. But if you withdraw and again put it back, then only we will charge GST. So out of the 10 lakhs you made it 100 lakhs, out of 100 lakhs you are withdrawing 40 lakhs, and then you are playing. So after playing, entire balance 60 lakhs you lost, now again you are depositing 40 lakhs to play, that 40 lakhs will be again subjected to GST. Okay, so that is what the concept. So I repeat, sir, you have taken 10 lakhs to the casino or for online gaming or online money gaming, that 10 lakhs you kept on winning, it became 100 lakhs. After becoming 100 lakhs, what, you're withdrawing 40 lakhs for safer side. Okay, let me just close all my loans and become debt free like that, so let me play with this 60 lakhs. You're playing, and that 60 lakhs became zero. Now you are putting back again that 40 lakhs, then that will be subjected to GST again. So that is what the concept. So here I just give you the meaning of online money gaming and online gaming. You can just pause the video and go through that. So online money gaming, we can say Rummy Circle, online gaming you can say PUBG. Okay, so this is what the concept. Okay, there is a small example here, casinos and online gaming including online money gaming. Sir, Mr. Gambler is visiting Big Daddy Casino in Goa, participating in a gamble by buying chips, paid 10,000 in cash and 20,000 using Bitcoin. Refund, he has taken 5,000 for not using the chips. He won 60,000 and played using 40,000, withdraw 20,000 and invested back 15,000. What is the value of supply? So the value of supply is, first he has deposited 10,000 and 20,000. Later on he took refund, all that, it will not be considered. So 30,000 will be value of supply. And later on again, whatever the winnings etc story happened, again how much amount he has invested? So he has invested 15,000. So value of supply will be 15,000 again. So that is the story. Okay. So a simple example to clarify every adjustment, right? So this is what all about this particular rule 31B and 31C. So let us move on to the next amendment. So the next one is rule 32. So rule 32, you know, sir, for certain specific supplies here, they are talking about the value. And please understand, the first one here is with respect to sale or purchase of foreign currency, including money changing. Here, with respect to sale or purchase of foreign currency, there are two options available. First option is C. First of all, understand one mistake you might be doing here is, using these rules we are calculating only value of supply, not the GST payable, because the values, the amounts are being smaller. You should not misunderstand this is GST amount. No, we are calculating here value of supply, not the GST amount. So when you are buying and selling foreign currency, the first option for you available is, what is the transaction you are undertaking? See, the option one is, see, one is standard flat rate based upon the amount of transaction happening. The next one is different. The next one, first option is nothing but is not flat rate. Second option is flat rate. Here first let us go with the transaction based on that, all that stuff. So first option is nothing but, sir, I am buying and selling foreign currency, sir. In that, Indian rupees may be involved, may not be involved. If Indian rupees is involved, the buying or selling rate, whatever it is, and RBI reference rate for that currency, whatever is there, into number of units. For example, here, sir, I am exchanging $100 into rupees, where 74 rupees is the currency rate. Now here RBI reference rate is 75 rupees. So what is the value of supply? 1 rupee is the value of supply. How many dollars you are changing? $100. So 100 rupees is the mm, yes, 100 rupees is the value of supply. Okay, so this will be the value of supply. On that you should pay GST. Sir, suppose this RBI reference rate of 75 rupees is not involved, sir, then what should I do? Then here $100 you are converting into rupees, 74 rupees. So how much Indian rupees are involved? 7,400 rupees is involved, sir. In that 1% will be the value, that is 74 rupees will be the value. So I repeat, when Indian currency is involved in exchanging, you see the RBI reference rate and the actual buying or selling rate, whatever is the difference into number of units of foreign currency, that will be the value of supply. If RBI reference rate is not available, then if RBI reference rate is not available, sir, if RBI reference rate is available, buying rate or selling rate minus RBI reference rate into total number of units of foreign currency. Okay, if RBI reference rate is not available, then what we should do? 1% of the gross amount of Indian rupees involved in that transaction, that will be the value of supply. Hope it is clear for you. Sir, suppose I am buying and selling foreign currency where Indian rupees are not involved. For example, I am giving UK pounds and getting dollars. Imagine I am getting giving UK pounds and getting dollars, something like that. That means dollars are given, pounds are taken, or pounds are given, dollars are taken. Indian rupee is not involved. Then what should be the value of supply? In that case, what you have to see now? See, for example, $9,000 you are converting into 4,500 pounds. Both dollars, $9,000 also you convert into rupees. 4,500 also you convert into rupees using RBI reference rate. Okay. Whichever the amount you get out of the two currencies. Okay, sir, so out of the two currencies, you see how much ever less amount you got, which got less amount. For example, $9,000, if I am converting it into rupees, I am getting the RBI reference rate is 74 rupees, I am getting 4,41,000. If I am converting 4,500 pounds into rupees RBI reference rate is 98 per pound, then I am getting 6,66,000. Whichever is less, that amount will be the amount. On that I should take 1%, that will be the value of supply. Okay, so if neither of the currencies involved is Indian rupees, what we should do? We should nothing but convert both the currencies into Indian rupees using the RBI reference rate, and whichever is less, on that 1% you charge, that will be the value of supply, right? So that will be the value of supply. This is first option. So as I told, there is a second option. Whichever you want to follow, you follow. So the second option is based on the slab rates. Simple. Sir, what they are saying in the second option? Simple. You see what is the transaction involved, what is the value of currencies exchange in that. Sir, if it is up to 1 lakh, that means 0 to 1 lakh rupees, whatever the currency you are exchanging value is 0 to 1 lakh rupees. In that, what you should do? 1% of the gross amount of currency exchange, or 250 rupees, whichever is higher. That means minimum 250 rupees. That means if it is 0 to 1 lakh, 250 or 1%, whichever is higher. Okay, next 1 lakh to 10 lakhs, sir, it is 1000 rupees plus 0.5%. Sir, if it is greater than 10 lakhs, 5,500 plus 0.1%, or 6,000, 60,000. 60,000, whichever is less. That means understand, sir, this is the slab rate. That means understand, minimum amount should be 250. The value here we are talking, again we are not talking about GST, and maximum amount of value will be 60,000. On that they will charge GST. This is another option which they can go with. Okay, so there is an example here. You can just go with the example, pause the video and just quickly go through the example. With this we are done with this particular forex dealers option to go with the valuation here. 1 second. So if you want, just pause the video and just go with the example. Hope it is clear for you. Right, so let us move on now. Please understand here, see these things whatever are given in rule 32, sir, these are nothing but optional. These are option to the supplier. Sir, if he wants to follow these rules, he can follow that. Otherwise, whatever the consideration he is getting on that, they can straight away pay GST. That is what the concept. Okay, so we are done with this forex dealers. Next one is with respect to air travel agents. They can pay GST on the commission what they are earning, or straight away, or they have an option here. What is that option? Sir, they have the option to pay GST on the value. What is the value now? If it is domestic booking, 5% of the basic fare they can take it as value, or if it is international booking, 10% of the basic fare they can take it as value. On that they can pay GST. Sir, what do you mean by basic fare? So the basic fare is nothing but generally on the amount on which they get commission, the air travel agents. So here, if you see, Gagan & Sons air travel agent, sir, they are computing the value of supply. So they are getting this particular, see, domestic bookings basic fare is 1,900,000 and other charges 9,510, taxes 4,990. Total value of tickets is 1,15,400. But what is the value of supply as per GST? Sir, on this domestic booking, they can pay 5% as value of supply. So 5,045 rupees is the value of supply. On that, if they are paying GST, more than sufficient. Same logic with respect to international bookings. Sir, basic fare is 3,16,880. On that 10%, 31,688, they can take as value of supply. On that, they can pay GST. So that is what the concept. Clear? So this is with respect to air travel agent and his commission. So he can straight away pay GST on the commission whatever he is earning, or he can go with this option, whichever is beneficial to him. So the next business is life insurance business, the premium paid. See, the premium paid generally will be the value of supply. On that you will pay GST. But here the interesting part is, in the premium whatever you are paying, sir, there is also some portion which is related to investment. That means portion of the premium is towards the risk coverage and part of the amount will be towards investment on behalf of the customer. If that is known to the customer, sir, the value will be total premium whatever has been paid minus the investment which is known to the customer. No, sir, customer doesn't know about the investment. So in that case, first year whatever the premium is there, out of that 25% will be taken as value, and subsequent years 12.5% will be taken as value. I repeat, if the investment portion is there in the premium and that is not known to the customer. Okay, that is first and second case. Now there is another case, sir. If it is a policy with single annuity premium, sir, in that case, sir, if it is a single premium annuity policy, 10% of that premium amount will be taken as value of supply. And sir, as I told you, if the premium doesn't involve any investment towards the risk coverage, then straight away the total premium paid will be taken as value of supply. So for that I have an example here. So the question, you can just pause the video and go through this and you will be done with this concept. So hope it is clear for you. So let us move on to the next one. Right. So the next one is with respect to the special provisions related to value of goods by a person who is buying and selling second-hand goods. Now see, when you are a dealer of second-hand goods, I will just make it simple here. See, look at this. So first of all, if you have taken ITC, okay, normal valuation is applicable for you. You proceed, no problem. We are not talking with you. Sir, we are talking about people who have not availed ITC. In that case, margin scheme will come into picture. What margin scheme says? Now you are buying and selling second hand goods. Whatever the sale price is there now, minus whatever the purchase price, that you take as value. So if it is negative, ignore it. Simple. So value of supply is sale price minus purchase price. If you have not taken ITC on the second hand goods purchased, when you are selling, sale price minus purchase price will be the value that will be taken as value of supply, the difference amount if it is positive. If the difference amount is negative, then you will ignore it. Okay, this is what the margin scheme about which our Nirmala Sitharaman madam was talking about, and there were some controversies because of her explanation skills. Otherwise this is okay, fine. There is nothing negative here actually, I mean bad thing, all that stuff. So it is good only, right? So that is one. And next here, one interesting thing is, sir, when you are calculating the purchase price here, what if, sir, I have recovered the goods from a person who is defaulting my loan. I have given loan and that fellow has defaulted. So from the defaulting borrower, I have recovered some goods and now I am selling that. In that case, sale price minus purchase price. Purchase price, when you are calculating, you should see whatever is the actual price for which he has purchased on the date of purchase, and till the date of disposal by me, I have possessed that, no, I have recovered it from the defaulting borrower, no, that I am selling, no, till the date of disposal. How many quarters are there or part thereof? For everything minus 5%. So actual price minus 5% per quarter or part thereof. Okay, from the date of purchase till the date of disposal by the company who has recovered that. Okay, the lender. So that will be taken as purchase price and compare it with sale price, whatever is the difference that you take. Here there is a small question also from my end. See, look at this properly. Sir, Vishnu has taken a car, unregistered fellow taken a car from Sundaram Finance for 10 lakhs. He has taken a loan, and 5th February he has done that, and he has defaulted the loan repayment from Sundaram Finance, has repossessed the car and sold it on 7th July. Now, what is the value of supply of the car by Sundaram Finance when they are selling? If at all, sale price is 9 lakhs or 8 lakhs as the case may be. Sir, you know the sale price and you know the sale price 9 lakh or 8 lakhs, two different scenarios. But first thing we should know is the purchase price, correct? What is the purchase price? As I told you here, defaulting borrower, you are repossessing the goods, then what should be the purchase price? Means the purchase price is nothing but actual sale price by Vishnu, 10 lakhs minus 5% into how many quarters he has used. He has used it in the quarter of Jan to March. Feb is falling in Jan to March quarter, and of course I have used it in April to June quarter, and of course I have used it in July to September quarter. So I have used for 3 quarters. Please understand, part thereof also you should take as full quarter. So I have used it for 3 quarters. So 10 lakh minus 15%, 8 lakh 50,000 will be taken as purchase price by Sundaram Finance. Now they are selling it for 9 lakhs, means 9 lakhs minus 8 lakh 50,000, 50,000 will be the value of supply. If they are selling it for 8 lakhs, 8 lakh minus 8 lakh 50,000 minus 50,000, so the value of supply will be nil. So that is what the concept. For your clarity, if you want, you just pause the video and one more time just go through this example carefully. For you, if you felt like it is fast I have discussed, you just try to understand this, pause the video and go through the example. Now continuing the discussion here. So suppose if at all we are purchasing cars, we are using them and selling vehicles, cars or anything, vehicles. Sir, we are buying the vehicles and we are selling, we are using them and then we are selling. No, we are not second-hand car dealers. We are buying the cars, using for our personal purpose or business purpose, whatever it is, and we are selling the cars. In such cases, what is that we have to see? You have taken ITC. For you, this is not the place. Please get lost. Normal valuation. Okay. If you have not taken ITC, then the value of that supply will be sale price minus depreciated price if you have taken depreciation. If you have availed depreciation benefit under income tax. No sir, I have not taken any depreciation benefit, then sale price minus purchase price, that will be the value. If it is negative, you will ignore it. Okay, if it is negative, you will ignore it. No sir, I have availed depreciation benefits, sir, then sale price minus depreciated value, that will be the value of supply. I will show you one small example here. See, Vivarth Private Limited is registered in Tamil Nadu, buying the car and using it for business and selling the car to Mr. Vishnu. Okay, now sir, what is happening? The car when they have purchased, the value is 10 lakhs. GST paid 1,80,000. You know, car purchase, it is blocked under 17 subsection 5. We are not taking ITC. So we have capitalized the entire amount for 11,80,000. Now on that, if you see, we have availed already depreciation 8,20,000. That means 11,80,000 minus 8,20,000, 3,60,000. 3,60,000 will be the depreciated value. Okay. Now for what price I am selling this car? I am selling this car for 4 lakh rupees. So sale price minus depreciated value, 4 lakhs minus 3,60,000 will give me 40,000. So 40,000 will be the value of supply. I repeat, sir, because I am buying the car, using for my business purpose, all that stuff, and I am selling, sir, ITC not taken. ITC taken means normal valuation only, transaction value, all that nonsense. No sir, I have not taken ITC. Then see whether you have taken depreciation. Yes sir, I have taken depreciation. Then sale price minus depreciated value. How do you get depreciated value, sir? You see, when you have purchased, for how much you have capitalized and minus depreciation now. So balance value, whatever is there now, WDV value, right? Just take it that way. The WDV value, sir, 3,60,000. For how much you are selling? 4 lakhs, sir. 4 lakhs minus WDV value 3,60,000. 40,000 will be the value of supply. Simple. So that will be the value of supply. Suppose, sir, Happy Tours and Travels registered in Gujarat. They are selling this car to Mr. Vishnu. Sir, they are selling the car for 4 lakhs. and the cost of car is 10 lakhs and GST availed 1 lakh 80,000, but paid 1 lakh 80,000. ITC availed is a depreciation. Same story. Now what is the value of supply? You know, these valuation rules are not applicable. Straight away transaction value will be taken as value of supply. What is the transaction value? 4 lakhs. So that 4 lakhs will be taken as value of supply because you have taken ITC benefit. So that is what the concept. Hope it is clear for you. Okay, so this is the example. So with this we are done with that particular point of buying and selling second hand goods and connected used vehicles also. So the next one is value of supply of services which are provided in case of a pure agent. Please understand, any expenditure which you are incurring as a pure agent will be excluded from the value of supply, but there are certain conditions here. What are the conditions? So the pure agent, when he is making the payment, he is making the payment as a pure agent to the supplier. When he is making the payment to third parties, so he is making the payment as a pure agent of the recipient, and he is making the payment on behalf of the recipient, and it is separately indicated in the invoice by the supplier when he is giving invoice to the recipient. And one more thing, these supplies whatever he has procured as a pure agent, they are purely in addition to what he is providing on his own account. Okay, so that should be the case. For example, I am a chartered accountant incorporating a company on behalf of the client, and for that whatever the government charges I paid, sir, I am paying from my pocket and later on recovering from the client. So that is pure agent. Okay, so they are in addition to the services what I am providing in my own account. I charge some consideration, let us assume 1 lakh rupees for company incorporation. In that case, sir, whatever the amount I have collected for stamp duty, etc., the government challan payments, 200, 400, all that stuff, sir, that is not included in the value of supply because I am acting there as a pure agent. Okay, so that is what the point here. Pure agent means what, sir? Sir, pure agent means, the meaning says pure agent means, first of all, there should be a contractual agreement between recipient and supplier, as the supplier is acting as a pure agent, incurring the cost on behalf of him, and the supplier neither intends to hold or holds any title on them whatever he is procuring. He doesn't have any own interest on the goods or services what he has procured, and he receives only actual amount incurred in addition to the amount what he has received on his own account. As I told, I am charging 1 lakh rupees for company incorporation, I am receiving that, and also they are paying me that 1200, 1300, 400 rupees, 500 rupees which I have paid to the government as a stamp duty, etc. Okay, so then that will be excluded from the value of supply. That is with respect to pure agent. And this airlines acting as a pure agent, collecting this passenger development fees and user development fees and giving it to airport authorities or airport operator, will be excluded from the value of supply of the airline operator that we have already discussed in supply chapter. Okay, so here airlines are acting as a pure agent of airport operators. So this PDF, passenger development fees or user development fees, what they are charging from the customer on behalf of the airport operators and giving it to the airport operators, will not be included in the value of supply of airlines. So that is the point here. So with this we are done with this pure agent also. So the next one, if you see normally in this big malls or airports, etc., sir, these real estate companies or malls or airport operators are renting the premises as well as they are providing electricity to the tenants, and they are collecting the consideration as well as electricity charges, all that stuff. What is the GST treatment for that? That was the doubt, and for that it has been clarified, sir, this is a bundled supply where renting of immovable property is done, and that is principal supply, and incidental or auxiliary to that electricity is also provided, and no matter whether it is billed separately or not, it will be treated along with the principal supply. So renting of immovable property itself will be taken into account. Suppose if they are paying this real estate companies or the resident welfare associations or anybody for that matter, airport operators, etc., they are paying the electricity charges on behalf of the tenants as a pure agent, then it will be excluded from the value of supply and will be taxed accordingly. Clear? So the balance portion only will be charged to tax. So that is what the clarification. So hope you have enjoyed this lecture. Please understand, value of supply, very important chapter. We have just quickly revised all the concepts with the relevant examples here and there, and your revision will be complete only when you do problems on this. So my strong recommendation is take ICA study material book back questions, finish them off, and model test papers, all the model test papers, value of supply questions, please finish them at the earliest so that your revision will be effective. Hope you have enjoyed this lecture. See you all in another video. This is your Mr. GST signing off. Jai Hind.